a mix of challenges and opportunities, with key activities shaping the country's economic landscape in 2023. Although the economy was characterized by a mix of electoral tensions, policy decisions by the government, rising commodity prices, and global inflationary pressures, among other challenges. Despite these challenges, experts say there is an opportunity for Nigeria to transform its economy, as the economy projected to grow at 3.3% in 2024 and inflation to moderate to 21%. Well, let's get talking now. I'm being joined by the co-founder and chief executive officer of Budget Nigeria, Mr. Oluseun Onigbinde. He joins me from the United Kingdom. Asheun, it's good to see you, and compliments of the season.
Speak with you. Thank you so much. Yeah.
All right. Well, reading through what Nigeria as a country has faced this year and also globally, I see that there's a lot to talk about. But first, I would ask you, in your understanding, from the cash crunch to the elections to what we've seen around decisions made after handing over to you, what are the key highlights of economic issues that have shaped this year? Let me ask you that way.
Yeah, thank you so much. And let's not forget that key highlights are in different stages. We can look at it from a Nigerian perspective,
yes,
also even from a global perspective.
Yes.
But if we look at it from a Nigerian perspective, we know that this is an election year. We had elections this year, so that triggered a difference in what happened in a significant way. I will put those highlights into some key buckets. One is to look at the inertia in the fiscal space. So the previous government presented a budget and did not properly fund it. The current government also had to pass a supplementary budget so that part of that project could be implemented. And so you will see that there was a bit of restriction in the fiscal space, because if you compare that to what we had in the previous years, where a lot of monies were either borrowed or were spent, or those were things that I saw. The other thing you also see again in the highlight analysis is the idea around the inflation. Public inflation is not slowing down in any way. Inflation continues to rise. Inflation continues to the consumer prices, and I think as we know, the current situation with the removal of fuel subsidy and also the unification of exchange rates created a much more difficult space, a much more difficult environment in a way. A major challenge in that environment is that inflation did not slow down. And also when you even look at it from the angle of food inflation continued to rise, also reaching in the 30% zone. So it's a big problem for the country. The stock market performance has been exciting, especially for those who indulge in it. Considering the fact that for years it's had a lull. We've had some environment where maybe the MTN or Dangote came into play and made the difference in it. But we've had situations where the exchange rate has also made a bit of a push in that regard. So it's good that we've had inflation slow down, or we have had other things happen, but it's about making a difference in a way and making a change in that. But I think the major key highlight that I have seen in all of these things is that inflation is not slowing down. Fiscal space has not expanded. The stock market has improved. Also, we've also had issues with the current mood in the consumption pattern in the environment, especially considering the removal of fuel subsidy, which was a monumental decision by the president.
Very, very interesting way to start. Debt. Before I got to the introduction to this discussion, we see that NBS is saying domestic and external debt now stands at 87.9 trillion naira. So I'll take my question from that and ask you, what's your worry about debt management and fiscal sustainability in Nigeria?
Sorry.
Asheun, can you hear me?
Yeah, I can hear you.
Yeah, fiscal responsibility, I meant to say.
Yeah. what I have about fiscal responsibility is clear and it's simple. We are, as a country, we're struggling with raising revenue, but I think something you have to give to the current government of President Tinubu is that there's a bit of concern for macroeconomic stability in some sort of way. We for years in the previous government, it looks like some of the indicators like inflation, monetary stability, it looked like those things did not matter to them. It was a question of we needed to spend and we have to continue to spend. So that macroeconomic balance that we see, which is targeted to attract more foreign investors and bring more partners in, I think that sounds a little bit interesting. But the challenge is still in there is that the government, those answers will not come quickly. The changes that they are making in the entire system will not lead to some form of reform quickly. And the other part is that we also don't have fiscal discipline as we should do, in some sort of way. We were expected to have some level of fiscal discipline. And if you look at the Nigerian budget, it did not reflect that as it should be. The budget, in my own view, still looks like a Buhari budget. It's not tied to strategy. There's so much fragmentation of public projects. We have a whole lot of agencies that are putting items in the budget that do not align with the mission of the budget. And so when you look at all of this in some sort of way, you face a way to say, as we go into the new year, there will be a whole lot of spending. There's a lot of intention to raise revenue. Debt might slow down a little bit considering the previous attempts to really get it up. But what will be a challenge in the end is just that if debt is not rising as it is, the government has to show effort by raising revenue, which I think is something we might see in 2024. The 2024 proposed budget is 18 trillion naira in terms of projected revenue. So that would trigger a little bit of difference about what Nigerians might see or not.
Getting more interesting. Now, we've also seen reforms, of course, around the economy, like we said, but globally now, let's see what's happening globally. We also see tightening of monetary policy across the board, but inflation remains, it's a flip-flop thing where some are getting better. Countries like Nigeria will still have inflation on the high side. What do you make of monetary policy decisions and how it impacts inflation and, of course, the business environment?
If you look at inflation, and I think the biggest challenge we have in the global sphere now is the issue of the U.S. Situation, the U.S. economy. I mean, the size, the weight of the U.S. economy has had a whole lot of influence on African economies. The U.S. Federal Reserve, in a bid to fight inflation in the United States, has taken on some decisions, to raise rates. I mean, rates as high, as 5%. And now what you have is there's a whole lot of incentive for people to keep investments within the U.S., considering that you now have a risk-free, even if you take some investments in the U.S. and that's benchmarked at that, you prefer that kind of investment than bringing it to Nigeria or to Africa or to other developing countries. And as you see that global investments flows have slowed down significantly. Even countries like India, touted as the next frontier for global growth, they have faced significant slowdown in foreign investment. So I think the biggest challenge is, biggest headline news this year has been inflation in the United States. We've seen a whole lot of currency outflows. We've seen a whole slowdown of foreign investment. And maybe for countries that are premised on tourism, have seen some level of boost. Commodity prices have oscillated in different ways. We've had some short periods of booms, and we've had also some slowdowns. For Nigeria, the story does not change. We are not producing at optimal capacity to be able to take advantage of some of these opportunities that we have. So the Russian-Ukraine war, and recently the Israeli-Hamas war also means that there's a whole lot of instability within the energy region. I mean, the Middle East, and if you add that with China and Russia, is highly responsible. It has an outsized production when it comes to for the energy. So in a way, I think the LD US economy is going to make a whole significant difference in 2024. And maybe what happens with how the oil prices are being able to be managed, because energy is a big element also in determining the global macroeconomics point. Because let's look at it, for example. The US is pumping around 14 million barrels now, which is highly significant. The US is the largest producer of crude, and OPEC is still making cuts and trying just to make sure that they can protect prices. How long that will last will also determine how things shape in 2024. And there's also a lot of acceleration of AI. I mean, you could see the US stock market has been on this geometric rise due to a whole lot of belief and a lot of stakes in the AI stocks like the AMD, Nvidia, Microsoft. All of them there's a lot of bets on some of these companies. So which means that AI, clean energy those would be critical elements that will be discussed, and that will also shape out the direction of the global space. For Africa, it's just a challenge of how do we expand trade within, and how do we also be able to attract capital and how do we ensure that those capital, when they come there, will be protected.
Yeah, let's move on now. Projections are there that the outlook is fair. Many say that there should be a rebound and all of that. But before I go there, you mentioned AI and, of course, that impact. And many say that might even affect jobs. Moving on. I don't know if you want to comment on that. That's on one side. And we also had some major global issues like the collapse of the Silicon Valley Bank in the US. And that also sent fears at a particular time to the banking segment in that space. So let's touch on this too. I think the global issues.
Yeah, AI would be a very definitive point. And I think, especially generative AI, the ChatGPT, the Anthropic, the Google Bard, and all of those things they're going to be significant, and they will have a whole lot of shifts. I mean, we look at marketing, customer service, they look at analysis. I mean, they look at maybe we'll not be able to put newscasters out of job, but definitely they're looking at a whole lot of reporting and documentation. Generative AI is able to deliver that in some sort of way. And I think that's something that would matter in the years to come, because we have a situation where there's a huge investment, either from the production level, or either at even building the interfaces, or either at the marketing of these tools. There's a whole lot of investment, and China is not behind, and the US is also trying to advance significantly at every level. So. And that would also mean a whole lot of shift for the job market. Maybe 2024 might be too early to be able to assert that, to be able to judge that. But by the time we get to maybe something like 2020, 30, then we'll have a full view of everything. Maybe some certain jobs that cease to exist because AI has taken up those spaces. And I think that will also matter to the US job market. And let's not lie to ourselves. Acceleration or deceleration in the US job market means a whole lot. And the pandemic had this boom of people being able to work from home, so people were able to work 2 jobs, and also with the government's subsidy and stimulus, created this huge, expansive fiscal and monetary program that has triggered this inflation as analysts have projected. So as the government begins to roll back some of those things, and I don't think it will change, because also let's not lie to ourselves, the US has an Inflation Reduction Act, that is also. But that sounds like an oxymoron in some sort of way. It's also like an expansive fiscal program over a longer period. So, at the end of the day, it will depend on how AI is able to change things rapidly and what that means for the labor market in the short run. The other part also is to look at the banking sector itself, and also look at the US mortgage market, even the global market. I mean, mortgage rates are inching to around 6 to 7%. Does not sound healthy for most of these economies. We're already seeing a bit of slowdown in mortgage in housing market. So, and China is has a property market crisis. So definitely, if all of this accelerate beyond reasonable measure, we might be looking at a different 2024. That's why the US and maybe China has to get their hearts together in some sort of way to put their economy on strong for their mental side. We also have to look at the energy market also has to have some level of stability, maybe around the $70 to $80 corridor, so that at least at that level everybody can breathe and can have some sum of prediction. But if some of uncertain war blows up in the Middle East, maybe Iran is attacked, or maybe Saudi Arabia is drawn into it, then you have some form of explosive energy market at the end of the day. But I think at this current phase that we have, it's more of the whole pressure is on the US to be able to slow down inflation significantly, and so that they can have a little bit of exodus of foreign capital to develop in economies that significantly need it.
So, personally, what is your outlook considering all of these challenges? What are you thinking? When do you think we would? Because some still say we are yet to get to pre-COVID levels.
Yeah. I don't think 2024 will take us to pre-COVID levels. I feel like one thing to heavily watch out for is how the acceleration of AI technologies and what that means for the labor market. That's something that I'm personally paying attention to. I'm also looking at the Middle East, the stability of the Middle East. What does that look like? What does that do into the energy markets? And especially when you have Russia also working with OPEC in the OPEC Plus agreement. What does that mean? Do we get a stable energy market in 2024? And that would be my own projection to how things look. The third thing is to look at is inflation in the United States and the housing market. What does that mean? How does that look in 2024? Because if inflation is not tempered in the United States and its housing market does not get a facelift, then definitely we might be getting into some of significant or some of difficult times in the year. Also, the elections in the US. The US is having elections in 2024. So that would also mean that's a significant global event. I mean, and the whole of countries are also having elections. Ghana, I think Rwanda, Germany, even the UK have elections in 2024. So you're going to have, you are going to have this situation where all of economies are going to be in this uncertainty. And the US is also going to be there. So you might see a whole of political economies on the sound footing towards the elections. For Nigeria, our major issues do not cease. Definitely, the energy is very critical for us. So I feel 2024 is very, very important for the energy deal that we have with the Siemens, and that has to work out in some sort of way. So I feel like the outlook on energy, we might see a window of that in 2024. Also, in 2024 is when we begin to see maybe some smoothing of things, because now you've had the initial triggers, the initial shocks based on the removal of fuel subsidy. If there's some form of fiscal discipline, which I don't see, because it takes a bit of fiscal discipline to make sure that you don't have loose fiscal funds up and down running around the economy that's also chasing the dollar. The government needs to apply a whole lot of fiscal discipline for it to be able to get some form of balance in the system. The CBN has been clear that it will no longer expand development finance beyond unreasonable limits. It will focus on its core mission of monetary stability. I think the other part is to look at the fiscal component to also apply a level of fiscal discipline. Without that, I think we are still going to be able to, if we don't do that right, and then if we are not able to attract capital, we might still have the whole of depreciation of the currency in the year to come. But in my own view, I feel the energy market is where I want to pay attention to for Nigeria, and also maybe the technology sector, and also maybe what happens to our agricultural sector in 2024.
Sure, I must thank you so much. Mr. Oluseun Onigbinde is co-founder, CEO, Budget Nigeria. Thank you so much. We appreciate you. I think our next chat will be in 2024. So let me wish you a happy new year in advance. Yeah. Thank you so much.
Thank you. Happy new year to you, Tolu, and compliments of the season. Thank you.
All right, they're coming up on the show. We'll look at the implications of the 50% discount on road travelers. At this time, I don't know if that impacted you, but we'll be looking at that, and also improved usage of CNG-powered vehicles. A friend of the house is a public affairs and policy analyst. Sagbola Olojede is live in the studio. We'll continue the conversation after this break. Don't go away.